Good afternoon. This is Brian Shannon speaking from Alpha Trends Blogspot. It is Thursday, January 4th, 2006, and the spiders on the screen right now, S&P 500, did close with a gain of 29 cents today. And just looking at this daily time frame, you can see that really nothing's changed once again. Kind of what I said yesterday. And this market is really just looking more neutral overall than anything. There's definitely been some wild intraday action. However, we do have the 10-day moving average, which has crossed through the 20-day moving average, as we saw in the Nasdaq 100 about 4 or 5 weeks ago, maybe 6 weeks ago. What that typically means is the market is going to go sideways now. It's just a mixed message that is the short-term trend, meaning the 10-day moving average, is heading lower. The intermediate and longer-term trend, that is the 20 and the 50-day moving average, are both heading higher. So we have a mixed message from the various trends. And after a run like the one we've seen here in the S&P 500, it means that we're probably just going to see the market turn sideways for a bit in here. Now, the support that we've been looking at 140.75, and I didn't draw that trend line in too good, but the 140.75 level, let's take a look at the 30-minute time frame. 140.75 was tested once again. We'll even look at a 10-minute to make that a little bit more clear here. But that was tested early on this morning, and it held up. In fact, the Qs were holding much better than the S&P 500, and you can see that the S&P rallied up to a level where you might have expected a little bit of resistance because we had this strong level of support prior back here in the last week of 2006, and we've also got the location of that 5-day moving average right there. So it looks for now as though the short-term resistance is at 142 and a little bit of support probably down near 140, 150, and then 140.75. Overall, again, I'm just going to continue to say the same thing, which is that I'm neutral on this market. It's range bound. There's no advantage to going heavily long or short right now. That's the message the market is sending us, and it's been sending us that in the Qs as well. The Qs broke their trend line about a month and a half back when that 10-day moving average broke through the 20-day moving average. And we've been cautiously optimistic, thinking that because the rising 50-day moving average, the direction of the moving average rather, is rising, that gives us the benefit of the doubt that it goes to the buyers. And here's what happens. A lot of times you see that it breaks down below an obvious level of support, which is further made obvious by the fact that it was under that 50-day moving average for so long. But then the buyers took control, and some shorts got squeezed pretty good in here today. Nasdaq, the Qs finished with a 1.9% gain today, and you can see the buying was much stronger here than it was in the S&P 500 on a relative percentage basis. Looking at a 30-minute time frame after yesterday's wild action where we saw that gap higher and then a sharp sell-off, what happened in here is that early on the market was able to get above and then hold above that 5-day moving average. The direction of that 5-day moving average still remains higher as well. Once the market couldn't break down below that 5-day moving average, then the shorts got squeezed in here. The market went sideways on light volume. This is exactly what you're looking for as a trend trader, even intraday, is that up on big volume in here, and then the volume relative to the event. The event was that the shorts got squeezed pretty good in here. The market got back up above that level that we've been looking at, which is $43.60. It held that $43.60 level after being tested on relatively lighter volume. That is, again, relative to the event, which was the move higher. And then we saw a nice push higher into the close. So where does that leave the Nasdaq 100 on a daily time frame? Smack in the middle of this range that it's been in. Nothing really to get excited about. The potential for resistance is up here at about $44.80. And we've seen the market come right up to the center of that area. So perhaps we're going to get a little bit more strength up to the top of that range. But again, it's more range bound than anything, so there's really not a big advantage to being aggressively long or short. It's a stock picker's environment in here, and that's what we're going to try and do, is focus on finding the good setups. The semiconductors had a good day, no doubt about that. These guys finished with a 1.8% gain. It's not quite as strong as the Nasdaq 100, but it did take some resistance out from the last week and a half, 2 weeks at $34.20. So that's important to look at and make note of. Tom had noted that maybe this looks like an inverted head and shoulders, and I told him that, yeah, a messy one, but perhaps that could measure out the height of this. It would be about $1, so maybe that heads up to 35.20. If these Qs were to get up to 35, or not the Qs, but the semis were to get up to 35.20, that'd put them right about up in here. With this area, I think first you've got a little bit of potential for resistance near the 34.60, 34.70 level. But this is, again, what a neutral market looks like. And I went back, yesterday I was talking more negative on this group, but now that it seems to have recovered, I think that the shorts, if you're getting short these semis, that you probably ought to cover part of your position, and maybe even think about getting long some stocks in the group that might be set up well. MidCaps, MDY, this same story here. We came down to the bottom of this range near where the support is. The strongest support really probably should be found about 145. Resistance for now, the main area of contention is going to be about 148.25. And let's take a look at that on a half-hour time frame. You can see that here. That's about 148.25. So right now, the intermediate term trend, looking at this 30-minute time frame, is still neutral. It's firming up. It's nice to see that we had a shakeout and the buyers are coming back to the market. However, they're not convincingly in control. A move above 148.25 would convince me that the buyers are more aggressive in here, and then perhaps it would go on to test the high of this range, which is up near 150. So that's the state of the markets right now. Let's take a look at the stocks that we've been looking at. Yesterday we got involved in AIRN, and this stock is Airspan Networks. We had purchased the stock at $3.72 yesterday, and I had suggested raising your stop to 368. Let's go ahead and raise that to break even now. Let's put our stop at $3.72 in Airspan. We had also looked yesterday at GHDX and gotten involved in this one. We got involved at $18.80 as it took out a little bit of resistance in that 5-day moving average. I had suggested raising your stop to $19.26, so you should have been stopped out with a gain of 46 cents in there. Boom. Now I know a lot of people were participating in this, and some people sent me emails saying, "Hey, great call." And it was a pretty good call, because I'd said to short it yesterday at 28.15 and then to cover half of your position at $27. So that would have been good for a $1.15 gain on half the position. However, the stock then gapped up, and I think that the right thing to do if you were still short was to cover into that strength, and that would have resulted in you purchasing the stock back at $28.65, or a loss of 50 cents on the balance of the position. So net, $1.15 profit and a 50-cent loss still comes out to a nice 65-cent gain. So it did work out well. It's unfortunate the company had news. It looks like people weren't convinced about that news today, but discipline is what's going to keep you in this game. So you got to do what you got to do. And I know a couple people did cover yesterday and actually shorted into that strength. So good trading on that part, but officially we're stopped out with a gain of 65 cents in there. ARQL, this is the company I'm not sure how to pronounce, so I'm not even going to try it again here today, but this stock we had purchased above $6.25 today, and the stock I had suggested a stop at 608. I think we can raise that stop now to $6.18 in ARQL. CYD, these Chinese stocks have been hot, and I thought getting this stock back above 745 would bring the momentum back into CYD. That didn't occur. I mean, it did occur that we got involved at 745. However, it did come down and hit our stop at $7.18. So if you traded that one, it was a loss of 27 cents. DISCA, this is Discovery Holding. And this stock we were looking to purchase above $16.50. So it should have been purchased at $16.55. The stop was going to be at $16.25. I think now that you can raise your stop to $16.25, And let's put our stop at $16.38 in there. So if we do get stopped out of this one, it'll result in a, well, I guess a 17-cent loss, whereas the original stop was 30 cents. So taking some risk off the table, even though the stock hasn't really moved in our favor yet. Lufkin, LUFK, we're looking for a rally up to 57.65, and then to, I'm sorry, 57.80. Which this high right here was 57.80 something. So it did breach that level, and then we were going to sell it short below 57.65, which occurred right in here. So you should be short this stock at $57.65. Let's drill down to a shorter term time frame, see if we can. Let's go ahead and put our stop. We've got the stop right now at 58.05. I think that let's call it our new stop, $57.82, 57.82. So that gives us a risk of about 17 cents now versus the original stop, which was 50 cents. So the stock's not working in our favor. Yeah, it is working in our favor, rather, a little bit, and we're able to cut that risk dramatically right now. MSCC, this is Microsemi, and Microsemi, we're looking for a rally to 1925. We got that rally right here early on, and then the plan was to sell it below $19.15, which also occurred. And our stop was going to be $19.45. So you should still be in this trade. And I think that let's lower our stop to $19 and let's just call it $19.40. So instead of risking 30 cents in here, we're going to cut it back a little bit by a nickel, and we're just going to risk 25 cents in this one. The last stock that I had mentioned last night was SiRF Technologies. We're looking for a rally and then to sell it short on weakness below 25.15. That never occurred, so there should have been no trade in SiRF.